Yeah, so I used to be hearing those who were already trading. They will be saying, today is NFP. Oh, we are going to be making money today. And you all what? We are naive, like we are blind to what they are saying. So you will just present ourselves during when the news is about to be released. And we are also trying to make some money. That's what I used to be doing. So sometimes when it's an NFP news, I will just fund my account like $20, $10. I was trying to make money from that thing, like the news event. I used to try to make money. When it's the CPI, I used to fund my account and this news event, I will never forget this news event. That was interest rates on the pound. I funded my account and I was already in a trade. I was ignorant. I was naive about the data that was about to be released. I found out I was already in a trade. The trade was in profit. I didn't check the fundamentals. So I just left the trade running. I came back to check my trade. I noticed my account has blown. So I try to figure out. So I've been someone who has been curious when it comes to this thing that I'm doing. This my trading journey. I've been curious about every single thing. That's why sometimes when I'm teaching, most people understand because I try to teach to. I mostly whatever I learn, I try to understand the logic behind. I don't just take anything on the surface. I have to make sure I understand the logic behind whatever the decision or whatever I'm learning. Okay, I have to ask myself, does it make sense? I don't just take any concept, on a face value. I have to make sure I understand the concept. So I try to figure out why did I lose that trade. So I was researching. Oh, where did I trade on support or resistance level? I was trying to bring everything. Was the timing right? I was checking all those things, and I noticed that there was interest rate on the pound. That times I was trading GBP USD also. Yeah, I was trading, and the trade went against me. The directional bias of the news, the direction of the news went against me, and I lost. I blew my account. So I took note of that. So those who are not taking note, if you lose a trade, trading is a learning phase. It's a learning journey. Anytime you lose a trade, just find out. You need to ask yourself why you lost that trade. Don't just take it like that. Trading it's a journey. That's why I always advise people not to just go in when you don't have strategy, when you've not understood the concept. Don't just go in big in the name of you want to make money. It doesn't work that way. You need to acquire a lot of knowledge about how this thing works before you start making money. So you learn before you earn. That is how trading works. You learn before you earn. So I figured out and I noticed that it was that news release that made me blow the account. So I took notes and I keep on observing when there's a high impact news is about to release, what mostly happens. So it got to some time I wasn't paying attention or I wasn't paying heed to those high impact news. And there are some observations that I notice when it comes to this news event. So if you are a beginner, okay, I know a lot of people are mostly not having mentors. They are just they've tend to ashawo. They are just roaming on the internet. Everywhere they land and search for, they find information and they move. Some people will tell you, oh, it's news events. You are going to be trading the CPI. You are going to be trading the unemployment rate. You are going to be trading the employment rate, the NFPs. You are going to be trading the what do you call it? All the major impact news that is volatile when it's about to release. You are going to be trading them. One thing from my observation, anything that I take is not something like I just learned on the internet. Okay, maybe I learned it last week and I've not witnessed or I've not practiced it. Everything that I tell you is something that I observe. So for me, if I get a new concept, I don't just start executing trades on that. I don't just start inputting trade on that. I have to make sure I put it on text. Okay, I put it. So last time on my bootcamp, the current bootcamp that is ongoing. So I was telling them that currently transitioning to gold. With gold, it's very volatile. So I'm trying the same system, but I'm trying the levels on the H1 and see how it works. That does not mean I've started executing trades on them. So I have a note over here that I take notes. So you see, if you watch my notebook over here, this is my sticky notes. I've taken notes. So all the system is the same, but I've just transitioned to lower time frame, observing how things happens over there, how the market will expect those levels. I'm trying to, so sometimes I'll observe like 3 months, 4 months, taking notes. You get, before I will conclude that this is what works, this is what, that's why my strategy is very like it is something that clicks a lot. Okay, if you understand it very well with the H4 time frame, that's what I preach about. If you start implementing it, you will notice that it is something that works more often, because it is something that I took my time to observe and see how it works. You get, so anything that I will tell you is something that I have experienced. It is something that I've witnessed it for a very long time before I justify or concluded that it works. You get it? So with the fundamentals, when it comes to the data releases, with the fundamentals, some people will say, oh, you don't know how to trade the news. That's why you are saying it is not good for us to trade. So from my observation, from my 6 to 7 years observation in the market, when all these when these major data are about to be released, when it comes to the fundamentals, I will urge or advise you not to participate in the market. Okay, Danny, do you have something to say? I've seen you raise up your hand.
The screen is not showing at my end. I can't see your screen.
Okay. Can see Telegram mostly have some.
So I don't know if it is for the rest of my colleague traders.
Are you all not seeing my screen? Please, are you all not seeing my screen?
So we can't see.
Yeah, there's nothing showing on your screen.
Are you seeing it now?
Not yet.
Or it's still not?
No, let me leave and join again.
Let me see something. Okay, I've seen the problem. Is it showing now?
Not
Is
yet.
it showing now? Not yet.
Not yet. Not yet.
Let me see. Still not showing. Still not showing. Hello, can you hear me? It is still not showing.
So we can see you. On my side here, I can see.
What are you seeing on the screen?
Yeah, website for a factory.
Okay, then maybe the problem will be from you. Check your network.
So it's clear since you started.
Okay. Yeah, so let's continue. So as I was saying, everything that I talk about, I take my time. For me, this journey, I'm not rushing it. Okay, because I know it's not going anywhere. It is something that is going to be there. And if you have the skill, no one is going to take it from you. If you have the skill, you are going to just tell yourself maybe you are going to take like 6 years of your life to master this thing. The rest is all going to be enjoyment. The rest is all going to be exciting. This thing, your life is going to be exciting. So I'm not rushing. So I take my time to observe things. I take my time to take data. Data is very important when it comes to this thing. So with what I was saying, everything that I talk about is something that I've observed, is something that I've experienced. Okay, so when it comes to data releases, especially to those who trade forex, especially to those who trade currencies, it is something that you need to pay critical attention to. You get it? So most often you lose trades, most often the market stop you out, and you mostly just ask yourself, why is this thing happening to you? You get it? The reason why most often these things happens to you is because you mostly ignore the news events. You get it? So one thing I will tell you is when it comes to the data releases, or when it comes to the major data releases, you don't have to be trading during that time. You get it? I know some people are having different opinion when it comes to this, but I would advise you, it is not advisable, because when the market starts going against you during a news data, you are really going to be in a deep drawdown, especially to someone who has not set stop loss. You are really going to be in a deep drawdown. So one thing I would advise you is when a news data is about to be released, it's mostly what affects the market. The market becomes very volatile. There's rapid, or the price move very fast when it comes to this thing. You get it? Sometimes there will be sudden spike of price will move to 5, and all of a sudden it will just come down to 1 again. You get it? So you need to make sure you are not participating during that time. You get it? You are not participating. So maybe 30 minutes, 1 hour to the news event, just observe, because most often what happens is this market is being influenced by major market players. It is being influenced by participants. You get it? It is being influenced by major market players. So if those people are observing to see the outcome of the news, even though mostly what happens is they take positions. So today I'll be talking about this thing. When it comes to the forecast, most often when we retailers, mostly what we think is the forecast, the consensus figure is what the big players are going to base on. But mostly they make their decisions before the actual numbers plays out. So one thing you need to understand is the forecast or the consensus figure is not mostly we like. What happens is not what the forecasted amount, that figures that you are seeing over here is not what major players or the big market players are taking into consideration. It's just that they've already taken their decisions before this thing. So we have something called pricing. When these data are being released, they already take their decisions before it will play out. You get it? So when it comes to why do you have to even pay attention to this data or this major market, this data? Why do you have to pay attention to? One thing you need to understand is when it comes to Forex, it is majorly influenced by the activities happening in the economy. When it comes to the stock market, and even when it comes to crypto, it is majorly influenced by fundamentals. So some of us mostly get annoyed, we mostly get bored when a trade goes against us. One thing you need to understand is even though with the technical analysis, what we are doing, the lines that we are doing, we think that is what moves price. But one thing you need to understand is these lines that we draw on the chart is not what mostly influence the exchange rate. You get it? For a currency or for a country currency, for a commodity, for an asset to appreciate in value, for an asset to depreciate in value, it is not being for an asset to appreciate in value. It's not based on the technical analysis. It is not based on your trend lines. It is not based on your horizontal lines. It is not based on the market structure. It is based on fundamentals. You get it? It is based on the fundamentals. So today we are going to be talking about some of the major economic events, major news events, and how you can use them in your advantage, how you can interpret them. Okay, how you can interpret them so that when you are making decisions, when you are blending it with the technical analysis, you can make the right decisions. You get it? So one thing I want to advise you, or one thing I want to tell you is don't get annoyed, don't get bored when a trade goes against you, because your lines that you are drawing is something that is not, it is not something that 100% influence price valuation or currency valuation. That is what you need to understand. What mostly influence price or what mostly influence currency valuation or devaluation is fundamentals. You get it? It is fundamental. So if you are fortunate and you do your analysis based on the technical, using the technical tools, doing your analysis based on the technical way of doing things, and it goes in your favor, that's fine. But that is not what influence price. So as Christians will say, the New Testament will say, you are not saved by your works. You get it? You are saved by the death of Jesus Christ. So when it comes to the technical analysis too, you are not price does not move based on how good or how perfect you analyze the market. It is based on the economic activities. It is based on geopolitical activities. It is based on what? Maybe a world leader what is speaking, a world leader make a tweet. Those are the things that mostly what influence the what the currency to move up or to move down. So what you are doing is something that maybe you have experience of. Okay, it is data that you've gathered, and when maybe this person does this person does this will happen. But it is not 100% guaranteed that every day price is going to be doing this, every day price is going to be doing that. So that is why it is very, very important. I know a lot of people, when they start out, they are not even aware of the fundamental analysis. Okay, they are mostly not aware of the fundamental. They mostly pay attention to the technical analysis, the horizontal lines, the market structure, the trend lines, the chart pattern. That is what they mostly pay attention to. They mostly don't pay attention to the fundamental. So what drives price are what? The fundamental events. Those are the things that drives price. Maybe when there was what? CPI, like when there was inflation, like CPI, PPI, PCE, okay, purchasing producer, is it price, consumption, expenditure, or something. Those are the things that mostly what moves price. So please, technical analysis does not drive price. What drives price is what? The fundamentals, the economic activities. Okay, when world leaders are speaking, the fiscal policies, the monetary policies. Okay, those are the things that mostly drives price. So you need to also what? Be intentional. You have to also be aware of what? All those things, so that when you are making decision, it will give you more confluence on what? The trade that you are executing. But if you are naive, you don't know anything about the fundamentals, mostly you are going to be at the wrong side of the market, especially if you are someone who trades the United States pairs, okay, the USD pairs. It's mostly what? They are mostly what? Influenced by what? The fundamental. It's not only the USD pairs. Any pair that you are trading, when it comes to GBP, when it comes to JPY, the CHF, and those things, they all what? They all belongs to a country. So any activities that is happening in the country is having direct influence on what? The currency too that you are trading. So please take note of that. So the forex market, when it comes to price valuation, when it comes to devaluation of price, is mostly influenced by fundamentals. So please don't be angry with yourself when a price goes against you. Just reanalyze based on your data and see the wrong thing that you did and keep on. Sometimes it might be based on market conditions. So see the current crypto crash. A lot of people were not expecting that, unless maybe you are insider. You had you got an information before. Okay, a lot of people got their portfolio liquidated. A lot of people lost a lot of money over there. They were not aware. What happened? Why was the crypto market? Why did the crypto market crash? Because of fundamental. Because of what the government said. Okay, because of what Trump said. And see, the market crashed. A lot of people lost a lot of money. That's why when you are trading, it is very important you set stop loss, you protect yourself, so that when those unexpected news events, you don't get crash. You get it? You don't get crash. You always get your capital protected, or you get maybe the only thing that you are going to lose is the amount you projected or the amount you budgeted to be risking. So it's very, very important you protect yourself anytime you enter a trade. So when it comes to the news event, why is it not advisable to take advantage of the volatility? Because volatility is very good when it comes to retrading. Okay, we need volatility. When there's no major news event, one thing that I've also observed is the market becomes very tricky to trade. The market moves very slow. It moves like most often your stop loss might even get hit. So it's very important for me, if I'm coming from my observation, if I'm coming to the market and when I don't see any red folder in the day that I'm trading, especially when it comes to the USD, one thing I notice is the market might be very tricky during that time. Okay. And when it is tricky, what mostly happens is you will do your analysis perfectly. You will analyze the market based on your data, based on the information that you are having. Everything is going to be looking good. But at the end, the market might stop you out. You have something called whipsaw. The market can just maybe, I intended to be taking a buy over here. The market will just stop me out with a small, sometimes price movement, and it will start moving in your favor. That's what it calls whipsaw. It will come and wipe you out, and price will go in your favor. So volatility is very important. When price is moving very fast, it is very, very important. But when there's major economic news to be released, what's mostly the dangers that comes with this? These are some of the dangers that mostly comes with it. So as I said, when it comes to the forex market, it is being influenced by what? An economy. Since you are trading economic currencies, okay, market price does not just move because of an algorithm or something. It moves based on what? The activities happening. Investors are very sensitive when it comes to these activities. Those who are making investments in an economy are very sensitive in the data. So that's why sometimes if an economy is performing very bad, their currency to also depreciate in value. The reason, you have a lot of factors that mostly affect all these things, but some of the reasons that I'm aware of is because what? When they invest in such an economy, they are not going to get good returns. And if people are not demanding for your country currency, what mostly happens is what? The currency is going to depreciate in value. Because the basic law of demand is what? The higher the what? If something is being demanded more, prices what? Also increases. You get it? If something is being demanded more, prices also what? Increases. So if people are not demanding for your country currency, what is going to happen? Prices are going to come down. It is easily for you to get access to the currency. But if people are kind of like making more investment in the economy, like everything, a country which is very successful when it comes to their growth data, okay, good data like GDP, gross domestic product, all these things are increasing, all these things are moving up. Investors will love to invest in such economy. Their currency too is also going to be very valuable. So the reason why the US economy is very valuable is because they dominate in most of the areas in life when it comes to their military, their world superpower. When it comes to their finances, their financials are very stable. Their political, this thing are very stable. That's why the US dollar is what? Is very, very strong. It's always appreciating, unless maybe it is paired with it is paired with gold. That is when gold always defeats the dollar. But when it comes to the other currencies, the dollar dominates. Okay, the dollar always dominates. Most often dominates amongst them. You get it? So that is why it's always being demanded, because of the stability. And every central banks are having their reserve in dollars. Okay, they save in dollars too as well. They have some of their money that is being saved in dollars. Apart from gold, they have some of their funds that are also being saved in dollars. That's what you call economic stability. So for me like this, most of my savings are in dollars. I don't save in CDs because I know that. So with the current happenings now, if you are in Ghana, I would love to even buy more dollars, because this is the good time to buy dollar. Okay, you know that no matter what, the dollar is always going to appreciate against the cedis. So if you want to buy dollars and gold, this is the time, because now it has the cedi has appreciated. It has appreciated more. Okay, so this is the time you need to buy dollar, because you know that from data, if you watch the charts now, you notice that always the dollar appreciates against the cedis. Always the dollar gains value against the cedi. So this is the time, if you want to buy the dollar, you will buy. So what I'm trying to say is the economic activities influence the currency to that we are trading. That's what you need to be aware. So you need to pay attention to the economic activity. So one thing I want to say about the dangers that when it comes to trading the news event, some of the dangers that you are going to be observing or going to be seeing is dangers in trading news. Okay, so don't be fooled by what most of these gurus are saying. You are going to be trading NFP, you are going to be trading CPI, unless maybe the news has been released before you make decision. But if you are taking it instantly, okay, or the moment the news the news is going to be released, these are some of the things that you are going to be observing. Spread is going to be high. Spread is going to be high. What it means is you are going to pay high amounts, or you are going to pay high commission for the trade, for the service charge. So you see, every trade that you execute, your brokers, they take you some charges because they are what? They are giving you some service. So you need to pay for the service charge. So when news is about to be released, because a lot of people are not trading during that time and the market is very volatile, what mostly happens is it becomes very difficult for them to get a counterparty, someone who is going to take the opposite side of your trade. So what mostly happens is they have to charge you high because they are going to struggle to get a counterparty. When it comes to trading, we are buying and selling currency. So if I'm buying the dollar, I need to get someone who is also willing to sell the dollar to me. So the brokers are the one going to find someone who is willing to sell the dollars to you. So if it becomes difficult for them to search the person for you, they have to charge you huge, or they have to charge you high amount to search the person for you, the opponent or the counterparty who is going to take the opposite side of your trade for you. You get it? So when you trade news events, these are the things that you need to be aware of. Okay, when the news is being released, that moment that the news is being released, these are the things that you are going to be seeing. Spread is going to be high, meaning you are going to pay high amounts as that is different from the norm. That is different from what you used to pay. Maybe if you used to pay like maybe 2 pips for GBP USD, at this time you are sometimes going to pay like 20 pips, sometimes 10 pips. So if you intended to be taking the trade, since spread is going to be high, let's say maybe if you are using spread 2 pips, so that means your trade is going to be triggered over here. 20 pips, sometimes it will be triggered at this point. You get it? Because they have to take out the spread before they will give you your orders get filled. That's what you need to understand. So when spread is high, you are going to pay high. You are going to pay high amount for the service they are rendering to you. Okay, you need to pay high amount for the service they are rendering to you. You get it? So these are some of the things that you are going to be experiencing. And we have something called slippage. Okay, when news is about to be released, sometimes you experience slippage. Okay, you experience slippage. What slippage means is your orders are not going to be filled at the price you intended to be taking the position. You get it? Your orders are not going to be filled at the price you intended to be taking the position. So let's say at this point, I intended to be taking a buy at this point. So when spread is high, okay, when you get slip, maybe this price is around 2. So that means 1 ounce of gold is going to cost you $2. When there is slippage, your order is going to be filled maybe at this point. So now you are going to be you are slipped. Okay. You are slipped. So you need to be aware of these things before you follow the hype of trading news events. So let's say this is $5. So you intended to be taking a buy at $2, this price level. But because of how price is very volatile, price is moving very fast. So your orders were not received early. So this is the price level you are going to be given. You get it? Maybe your target is close. Maybe your target is at this point. You get it? Maybe your target is at this point. And now this is the price level. Let's say maybe your target is at this point. And now this is the price level they are giving it to you. Your orders has already been filled at 5. What is going to happen? What are you going to do? What you are going to be doing is either you close the trade prematurely because you are close to the target. If you are close to the target, how can you manage the trade? Maybe you intended if price moves like this, you are going to break even. But since price is close to your target, what are you going to do? You get it? What are you going to do? And one thing you need to understand too is if you execute a trade and this is your target, it does not mean price is going to get your target exactly. Sometimes what happens is it's not going to maybe 2 pips near to your target and price will start pulling back. You get it? So at this point where price is close to the target, what are you going to do about it? So you need to avoid these things. For you to avoid these things, simply avoid trading when a major market news event is about to be released. Okay, so slippage is also one factor that is going to cause you a lot when you are trading news event. And you have something called whipsaw. Okay, whipsaw. I don't know whether the spelling is correct. Okay, either whipsaw or something, but that's not the correct spelling. That's not correct spelling. Okay, so when you talk about whipsaw, what mostly happens is what? Maybe you are in a trade. Okay, maybe you intended to take the trade over here. And now your order has been filled. Okay, you are targeting price to get to this point. Now at this point, your order has been filled. What's going to be happening is what? You place your stop loss around this point. So what is going to happen is what? Price is going to stop you out. It will trigger you in the trade. Okay, so trigger you in the trade. Price is going to what? Come stop you out. This is where you place your stop loss. Price is going to stop you out and later start moving in your direction. You get it? Price will start moving in your direction. So that's what you are going to be experiencing when a major news event is released. So price will stop you out. You get it? And one thing that you are going to experience again is what? Sometimes the screen will freeze. Okay, or either your broker platform is not going to be what? Going to be functioning. Maybe you place a buy or you place a position. You were thinking, oh, now the market is slow, so maybe your order hasn't been filled. One thing you are going to be observing when the market the platform comes to normal, you will notice that what? Your orders were filled. But you are not seeing it because at that point the market was very volatile. Price was moving very rapid. It was moving rapidly. You get it? That is why your order was not filled. So please take note of that. So all these things can sometimes cause you to blow your account, especially if you don't protect yourself, you don't set stop loss. Because news sometimes become very crazy moments. So a lot of people don't even set stop loss. Okay, unless maybe you have some funds that you are willing to blow it away, that's fine. But you need to be aware that when you are trading news events, these are the things that you are going to be experiencing. These are some of the bad experiences you are going to be witnessing. You get it? So you need to take note of that. Okay, you need to take note of that. So how can you use the fundamentals in your advantage? You get it? Before you interpret the news event, you have to first of all understand the meaning of the event and its impact on what? The economy. It's very simple. Understand the meaning of event, and you don't have to just know a lot about the news event. You don't have to know a lot about economics before you be able to interpret this. It's very simple. Just select few. Some of the major, I think 8 of the major news events. Okay, understand its impact on the economy. So some of the major economic impact news that mostly comes with volatility. Some of them are maybe some of the news events are inflation data. Okay, so when it comes to inflation data, we have the CPI, we have the PPI, and PCE. Okay, all these things, all these are what? Inflation data. Consumer price index, producer purchasing, is it producer purchasing index also? And producer consumption expenditure. Okay, all these things have impact on what? On the currency. And some of them too, these are the things that you need to understand. Okay, and you have growth data. So some of the growth data includes the GDP. So these are the things that you need to master. And you have employment data. So employment data. So the employment data, we have unemployment data. Okay, and sometimes the wages. So these are the news you need to master. And we have NFP. Okay, so they are maybe NFP is job data, US job data. Job data. Okay, and we have retail sales. Yeah, and the various survey, maybe PMI, Purchasing Managers Index, so manufacturing survey, okay, those things. All right. So after understanding this thing, you need to ask yourself, what is the impact on the economy, and how are you going to use this data in your favor? Because you need to understand, even after the data has been released, it's going to help you with your decision making, and it's also going to make you, or it's also going to help you to be very confident when it comes to taking a decision or taking a position in the market. You get it? Especially maybe if you have taken a trade, if you're about to take a trade and you notice that maybe during the lending session, CPI, inflation data was maybe high. Okay, if inflation data was high, what it means is what? Inflation, the economy inflation is very high. What's going to happen is what? The central bank is also going to increase their what? Their interest rate. So it is good for the economy. So what is going to happen is what? The currency is going to appreciate in value. So what's going to happen? What's going to help you, or is going to help you to also what? Make decision when it comes to maybe you taking a buy on the currency pair, on the currency that you are about to execute with it's going to help you when you are what? Executing a trade. You get it? Maybe if you want to take a buy on the dollar, this information is going to help you in what? Decision making. So it's very important you understand these various datas. You get it? And maybe you have some of this policy. You have we have central bank. We have central bank policy. Okay, central bank policy. That's the fiscal policy. The central bank is monitoring policy. And we have government policy. That's the fiscal policy. Okay, so with the central bank making policy like the interest rate and those things, it also have what? Major impact on the currency that you are trading. So one thing you need to understand is what? You need to understand this data and its impact on the economy. When it comes to decision making with the major market players, how are they going to take this data? You get it? So these are the things that you need to understand. Okay, so when it comes to inflation, what does it mean? Okay, you need to ask yourself, what does inflation mean when it comes to the economy with the effect on the economy? So inflation simply means when prices of goods and services are increasing continuously, like persistently. When you go to the market, prices of maybe water is this maybe $1. Tomorrow you go is $5. The following day you go is maybe $15. It keeps on increasing. It keeps on increasing. What it tells you is that there was inflation in the economy. Okay, so it's the same thing as when you see CPI, when you see PPI, when you see PCE, it means inflation data. You get it? So what it means is what? Prices of goods and services increases. Okay, so what impact does inflation? What are investors? How are investors going to take this data? How are they going to take this data? Okay, so if prices of goods and services are increasing, what it means is what? The central bank needs to come in to combat this thing. Okay, they need to come in to fight this thing. You get it? Because what is going to happen is when prices keeps on increasing, it's going to devalue the currency. You get it? It's going to even if you work very hard, when you get paid, it still doesn't buy anything. Because when you go to the market, your money that you've gotten, your salary that you have received is not going to buy the things that you used to buy, because price keeps on increasing. That's why the citizens mostly cries on the government to intervene on what is happening. You get it? The citizens mostly cry for the government to intervene to fight this thing. So what the government is going to do is they have to intervene. They have to come in to fight this thing. They have to come in to calm this thing. Okay, to calm all these things. So what they are going to do is they are going to bring in policies. Okay, that's what you call, the central bank will come in to bring in policies that is going to help people, that is going to it's going to make people save more other than spend more. So what they are going to do is they are going to increase. So when inflation is high, central bank comes in. Okay, central banks comes in. When they come in, what they are going to, so this is how the chain looks like. So when inflation is up, so the central bank will come in. When they come in, what they are going to do is they are going to increase inflation. Okay. They are going to increase inflation. Sorry, I said inflation. They are going to increase interest rates. So this is what it means. They are going to bring in some policies that people will love to invest. So let's say maybe you've heard an investment scheme, and let me take this one as an example. The reason why you are eager, the reason why you want to understand this forex thing is because you've noticed that the returns you are going to get when you master this thing, the returns that you are going to get when you become profitable, is way higher than the work that you are doing. Am I lying? That's why you are, even if you are tired, you try to learn something, you try to study, you try to watch the charts for you to be able to understand. Do you think if your work that you are doing, the returns or what you are getting from your earning is more than the earnings that you are going to get from this forex thing, do you think you will even worry yourself to study this thing? So this is a way to bring in more people. You get it? This is a way to bring in more people. So this is the strategy, or this is what the central bank mostly they use to take money from the pocket of people. So they will not come to your house and tell you, oh, how much are you having in your house? How much money are you having? Bring it. Nah, they don't do that. They will bring in policies, something that it's like how flowers attract insects. Okay, it's the same thing when it comes to this thing that I'm talking about. They will bring in policies. Okay, so you yourself will go and you yourself will bring all the money that you are having and you like to invest it. Okay, so they will increase the rate. If they increase the rate, a lot of people will love to when central bank increase rates, this is the results, or this is what you are going to be seeing. Savings, if you save, you are going to get good returns. If you invest in fixed deposit, you are going to get good returns. If you invest in treasury bills, if you buy government bonds, okay, all these things, anything when it comes to savings and investing, okay, when you invest, current account, you mostly get interest. The interest on current account too is also going to increase. So a lot of people, what they will do is they will love to invest. You get it? They will love to invest. They will love to save their money. And if interest rate is high too, cost of borrowing, okay, is also going to be high. Interest rates, the interest you are going to be paying on the loan that you are taking is also going to be high. Will you love to go and take loan if maybe you are paying like 50% on the money that you are taking for maybe just 3 months? What at all are you going to use the money for? So a lot of people will not love to what? They will not love to invest. They will not love to be taking loans. They will love to what? Save the little that they are having. When they get good returns, then what? They take it and what? Use it to fund their businesses or anything that they want to, either lifestyle they want to fund or anything of their choice. That is what, this is a way, okay, so this is a way that the central bank, so these are some of the monitoring policies. These are some of the things that they will bring, they will put in place for citizens to save. So inflation, what does this thing, with the explanation that I've given to you, what does it tell you about what? Inflation. So it means, in the sight of what? Investors, inflation is something that is good, because they know that if inflation is high, central banks are going to come in to increase rate, and now they are going to get good returns on their investment. You get it? So it is something that is good. So inflation is good for the economy. When inflation is high, what is going to happen is what? The currency at hand is also what? Going to appreciate in value. So the currency at hand is going to appreciate in value. So the currency at hand, what am I talking about? Maybe if inflation on the United States economy, the currency at hand is going to be the USD. Okay. If inflation on maybe UK, okay, or maybe euros, what's going to happen? Either euro is going to appreciate, or maybe the pound is going to appreciate. So that's what it means. So the currency at hand is also going to what? Appreciate in value. So when you see something of this sort, what are you going to be doing? You are going to be buying more of what? The currency at hand. So maybe, let's say, maybe if this is USD, what you are going to do is what? You are going to sell, because at this point, gold is the base currency. So you are going to sell the what? You are going to sell. If you are having gold, you are going to sell. If you are selling gold, indirectly, you have exchanged your gold for dollars. Okay. So you are going to sell more of your gold and what? Take more of what? Your dollars. You take more of dollars. So that's what it means. So understanding this will help you to make decisions. You get it? Understanding this is going to help you. So you need to first of all understand the meaning of the data. Okay. So this is an example. So if you want to interpret this thing, so we have the previous over here, we have the forecast. So forecast is the consensus. So it's like analysts, we have a lot of analysts in the world when it comes to people interpreting, gathering data, bringing data together to make, like, bring out their findings. Okay, it's like a research work. So the forecast is a lot of analysts. So when you go to the courts, when the judge is bringing their judgments, you have a lot of judges. You have like 8 judges that they are going to bring their judgment. So at the end, they are going to take the majority. You get it? So that's a consensus. So when it comes to this forecast, a lot of analysts has brought their research, they have brought their data, their findings. Okay, so at the end, they are going to pick maybe the majority findings. So that's what you call forecast. So this is not the actual data. So please, I've been getting these messages. A lot of people will be asking me, so that means this and this is going to be the actual. No, it doesn't work that way. Forecast is something, is like a speculated, it's just a prediction. You get it? It is not the actual. So mostly what happens is what? Most of the investors, based on these findings, they make decision before even the actual is going to be released. So we're thinking that, oh, we are going to base on this. When the actual gets released, then it will follow our fundamentals. Those major market players have already taken their positions, okay, before the actual get released. So they mostly make adjustments. They mostly adjust their positions. Maybe this is a CPI. And you know that CPI is an inflation data. Inflation is something positive for the economy. You get it? So if inflation is high, that means what? You compare the previous to the forecast. So forecast currently is 1.1%. Previous is 0.7%. What does it mean? So with the inflation data, at this point, we are anticipating or forecast, the analysts that were expecting a high inflation data or a high inflation numbers. So if inflation is high, the currency is going to appreciate in value. those investors, major market players, have already taken their positions. So as you are expecting the currency to appreciate in value, if the actual gets released and it appreciates in value, then they are going to be making what? Then they are either going to think of closing some of their positions and those stuff. But if it starts going against them, then sometimes they will readjust. Okay, they will readjust either to close their positions or maybe readjust and sell it fast. You get it? Readjust and sell it fast. So don't take this one as the actual. Okay, don't take it as. So that's why sometimes when a data will get released, you compare this and you notice that the currency is supposed to appreciate in value, but what you are going to be seeing is what it is doing opposite. Investors have already, big players, big major market players have already made their decision before this thing happens. That's what you need to understand. So please understand this. Wait for the news to get released before you also find a place and fix yourself inside a position. Okay, you readjust your position. That's what you need to understand. And when it comes to the GDP, you need to understand the event that as I'm saying, the GDP. What that GDP, gross domestic product, what it means is what, as in goods and services produced in a country. Okay, goods and services produced in the country. So if goods and services are like produced in the country is higher than as previous ones, it tells you that the economy is growing. You get it? They are producing more. They are rendering more services. You get it? The economy is growing at this point. So it is something positive to what? The currency too as well. So when you come here and you see GDP, red folder, you compare the previous and the forecast. And if the forecast is higher than the previous, it tells you that they are anticipating the current or the new data, okay, maybe new month's data as it is high, then the currency too is going to appreciate in value. You get, because at this point, GDP is something positive to the economy. And if it is high, that means what the currency is also going to the currency at hand is also going to appreciate in value. That is what you need to understand. So you compare the previous with the forecast. When the actual gets released, then you compare the actual with the forecast and see what the analyst forecasted, see if it is true. Okay, so let's find an example. Okay, so let me use this one. So yeah, so that's what I'm saying. After the actual has been released, let's say maybe if the actual is 5.1, that is what is going to give you the actual move of the market, the real move of the market. All these things, this one is just a projected or speculated figure. Okay, so understand that employment and unemployment, employment, if a country, a lot of people are getting employed, what it tells you that it's good for the economy too as well. Because if people are employed, it's going to reduce crime, it's going to bring money in the pocket of people, people will be able to afford, it's also going to increase retail sales because you get it. Goods and services, they are going to buy more goods. They are going to buy more goods. So our retail sales data is going to increase. Okay. When people get employed, that's what it means. But when people in an economy where people are unemployed, it's going to bring more expenditure. The government is going to spend more. So it's only Africa. Okay. I don't know if I'm in Ghana. I don't know of the other parts of the world or other parts of Africa. But when it comes to, I've not been there before. I've not been in the Western world before. But one thing I've heard is what mostly they get paid. You get it. Most people, you have unemployment incentives that they give to people who are not employed. So this is an expenses to the government. You get it. It's add up to government expenditure. So if government is spending more, it is bad for the economy. You get it. If government spends more, it is bad for the economy. So unemployment data is something that is bad. If unemployment data is high, it is bad for the economy or to the economy. You get it. Bad to the country or the currency too as well. So when you see unemployment data over here, let's say comparing this point is unemployment data, comparing the previous to the forecast, and you notice that unemployment is high. What is going to happen is the currency at hand at this point, let's say maybe if it is AUD is going to depreciate in value. You get it. So any currency that is going to you are going to pair it with AUD or Australian dollar, the currency is going to appreciate in value. AUD is going to depreciate in value. Okay, unless the actual gets released, you compare it for you to get the actual information or the actual move. That's what you need to understand. So understand NFP. This is also what job data. Okay, similar like something like employment data. So if a lot of jobs were created, a lot of people are going to get employed too as well. So it is something good. If the data comes out to be negative, then the currency is going to depreciate in value. So you need to understand all these things. Okay, these are some of the major event that you need to understand. So after understanding the event, you compare it to what you check it out and see its impact on what the currency that you are trading. Okay, is it positive? Is it going to have positive impact or influence on the economy? Is it going to have negative influence or impact on the economy? You need to understand all these things, then you make decision based on that. You compare the previous to the actual forecast. As I said, this is just a projected, this is what just a speculated figure. It is not actual. After the actual has been released, you compare the forecast to the actual, then you make decision based on that. You get it? So basically, this is how we mostly interpret the news. But one thing I'm saying is what? And FOMC too. Okay, FOMC too. This is interest rate. So okay, yeah, this is also monetary policy. It's just interest rate. Okay, Federal Open Market Committee. This is also an interest rate. So interest rate is what? Something that comes with a lot of volatility. You get it? So mostly I've filtered out, and this is what I'm currently using. I'm always basing on what the red folders. I know the orange folder. So when you come over here, the orange folder and the yellow folder, mostly they are not having impact like that. So I mostly focus on the red, and when there was bank holiday, maybe I avoid that day. Okay, but the rest are all hot. I focus on the red folder. Okay, so I've talked a lot. Let me hear from you people. Is anyone having a question? Is anyone having a question? Is anyone having a question? So it's not always that you need to do technical analysis. Sometimes you need to understand the fundamentals. Is anyone having a question? Is anyone having a question? Any question? Can you hear me? If you can hear me, let me hear. Yeah. Why no one is talking? Does it mean you people are not hearing me out? Danny, can you hear me?
Yes, I can hear you. I can hear.
Okay. Do you have any question? Are you having any question? How did the week go? How was last week?
Last week, yeah, it was profitable. The good profit.
Profitable.
Yes, please.
On currencies or on what?
Yeah, on gold.
Yeah. I've also logged in gold. On gold. Gold is the new deal now. Currency, I don't even watch it again. I don't watch it again. I had a lot of opportunity last week but I took only one. Last week it was only one trade that I had. That was this trade. But last week there was a lot of. It was only this move, but there were a lot of moves that I missed. There was
Those
one. There was this move over here. These breakouts, but I took these breakouts. There was one breakout over, and Mondays onto this one too, but there was this breakout that I missed. Price really pulled back perfectly. Yeah. So this was the breakout. Stop was wide, but its range before it started moving. Yeah. And it again came to the target. It came here again. Gave another opportunity. So this was the second trade. So maybe you take it when it breaks the high. Yeah, so this was the second opportunity. On the same day. So last week there were a lot of, and one move that I missed that really pained me was this move. It was a counter trend move over here. It was a counter trend move over here. This move rather, yeah. If you watch the H1, you notice that, yeah, this was a counter trend move, but it came to the level. If you watch the H1, I think the information was coming from the H1. Yeah, this move. So you notice there was what first touch, second touch, trend line touches over here. Price came to the level exactly at the 15-minute time frame. This move I was watching, but wasn't confident about the move. This was a massive move. It came to the level exactly. Price started move. So we learned from. Yeah. Today is not technical. We are doing fundamentals. Yeah, any question again? So how many trade did you take on gold last week?
Last week I only took 2 trades.
On gold?
Maybe like Thursday and Friday.
You took
So
a buy.
And then they all buy. It was a counter. The buy you just talk about when there was the news release.
Okay.
Yeah.
It was counter trend. Yeah, I'm considering of counter trend because gold counter trend sometimes works. So I'm also considering. That was what I learned from this move on Friday. It's also a counter trend. So this move, I don't know whether you took it on the 15 minutes over here, right? I don't know whether you took it over here.
I took it in 15 minutes.
This one, is it this side?
I took it at 15.
Yeah, this was the opportunity. This was a nice opportunity over here. It was a counter trend move. So I'm considering counter trend on gold.
Well, it's dangerous. This one I just went in I was actually observing the move, and I was expecting gold to buy, but it failed 2 attempts on even Monday, Tuesday, and even Wednesday. The level was broken into, so I said I will not mind. I was spotting the buy long ago.
Yeah, Monday this move, right?
If you look at the data coming from even Ghana and then US, gold is expected to rise. But I'm still not understanding the essence of the sharp decrease in the price of gold. And so even if you look at the trend from even last week and last 2 weeks or so, you can see that gold was just moving up. It was not even giving entries.
Yeah.
The pullback, I saw it as an opportunity for me to prepare for continuation. So I was
Yeah.
just in it, and unfortunately,
Yeah,
Friday,
so
Thursday,
if this week we get a breakout, we have a huge zone over here, but it's still a downtrend though at H4. But if you get
yeah.
a breakout like this, then Monday will be mostly if the good moves are moving like that, they don't give opportunity like that to for people to
Mm-mm.
enter. They just move very fast. So that it's either so let's see how the market if the market opens up like this, then maybe Asian session we can get a massive because we have a clean zone over here. So if it happens, it moves and the first H4 candle close above, the chances that gold next week is going to move up is let's see how the weekly yeah. So we don't have much information or data when it comes to this. It's still last week closed bearish. That's it. So you don't know whether it's just going to be continuation or something. Okay, so if you watch the daily candle too, the way the daily has also closed. So we don't have much information when it comes to this. The
We only
data
have to wait
analyzing
when the
it.
price is about maybe 4163.
You said?
We'll do when the price closes about 4163. Hopefully within the week, we can target the range.
Yeah. Yeah, that's the range I'm talking about. When it happens, it breaks above, then it's going to be a nice because you've had a lot of zones over here. There's one zone, two, three, four. So if it happens, it breaks out, then the chances that gold for the whole of next week is going to be I don't have fundamental data backing it though. I don't know what's happening around the globe. If Trump is just doing things right. Trump threatened Canada with 10. Hey, then gold is going to fly. 7 hours ago. 10% tariff increase for not pulling down critical as soon. So if it happens, then gold will fly. If this is going on, then gold will fly again. Gold is safe. One thing you need to understand is gold is safe havens. Okay. So if there was any bad news in the world, okay, the pandemics, geopolitical events like maybe demonstrations and those stuffs, gold is going to investors are going to look sharp and what just move their money over there. They are going to buy more gold because gold is safe haven. If everyone loses trust in the what they say the dollar, okay, because dollar is another. It's also a safe havens for most of the countries. You get it. So if they lose value, they lose confidence in the dollar. They are going to push their money in gold, the commodities, okay, silver, those places. That's why gold keeps on flying. It doesn't have much as in major what do you call it decline like that. Mostly it's rising because it's a safe havens. That's what you need to understand. So if you are seeing data like this, Trump threatens Canada with 10% tariff increase for not pulling down. This is a bad news for the US economy. So it's going to affect this thing. It's going to affect gold. Gold is going to appreciate in value. You get it. Investors are very sensitive. They are always reading news, watching what is happening around the globe. So this is not major news though. I don't know. But if it happens, so this was 7 hours ago. It can happen. Maybe gold will just open with a gap up. So let's see if it opens with a gap up. Then Asian session, you can, if you are not asleep, you can just find a trade and take buy. Okay, because you have a clean zone. If you look at your left, there's no data to our left to this side. So you see, last Monday, it was the same thing that happened over here. If you watch your left, there was no data. You see how this move to, I missed it, the way I was just watching this move and I didn't set alarm. I came and noticed that price has moved. It really pained me. So maybe you can get something like that. Okay, if you watch the H1 time frame, H1 time frame is an uptrend. If you look at the M32, it's an uptrend. But this lower time frames, I mostly don't trust it like that. So let's see how market open is going to. If it happens, it gaps up, then we can get a continuation for gold to continue moving up. Okay. Any question? Any
It's
question?
also it's a good maybe GJ might give us a good opportunity within the week.
GJ, GVP.
doing good. Yeah. So let's hope.
I buy or so. Okay, the daily looks clean. The daily looks clean. But the daily looks clean. But the H4. So what are you expecting?
Yeah, if you look at the H4, I'll wait for the next candle to close above point around 203.984.
Okay.
I went down to the lower time frame, look for just a small pullback and then continue. And then maybe move it up to the new high.
So gold and currency, which one is giving you more profitability?
For now, gold has been blessing last week. And last 2 weeks it was GJ and then EU. Last week was GJ and EU. But those pairs, after giving me a smiling faces, they took their monies back.
it will take it back. It will take it back. That's why I don't like currency anymore. Currency is hard. Currency trading is hard.
It took it back.
And I don't know. I don't know. Like this year, currency hasn't been good at all. The whole of last year, it was only GU I traded. It was getting close.
Currencies are poor.
Yeah, this year currency
the currency market is very, very slow.
See what's happening. See what's happening on GU. The only thing moving is the indices and the indices and gold. See, it has become very hard to trade it now. It has become very, very hard to trade it now. You don't see any major moves. I used to be getting good opportunities on USD card, but now I'm not seeing all these things. A lot of fake outs. I'm not sure I will touch currency. If I will touch, unless maybe next year, I'm not touching it again. It has become. Oh yeah, I'm not touching it. I'm just glued to gold. If I get 1 or 2 trades within a week, that's fine.
Yeah.
Currencies are.
Last week I was happy. I didn't force myself at all for trading. I waited when the opportunity came. I joined, and then this game, the more you think you are working hard, the more you get to lose more.
Yeah. And gold, one secret I've seen about gold is it respects the levels. Take notes. It respects the levels. It respects the levels. I don't know. I'm now testing out the H1 levels though, but H4 daily, weekly levels, forget. So that's why. So the counter trend that I'm talking about is because if you see this one like this counter trend, even though it's a downtrend, the counter trend that I'm talking about, I noticed that the H4 broke above. So this is how I could have taken advantage of it. So the H4 broke above. If you see the candle broke above, you get it, the body of the candle broke above. And if you move to the daily time frame too, we had some small zone over there. We had a zone over here. So those who took the buy, it was risky though. But I learned CPI came out. I don't know the data though. Yeah, so this was a perfect, because if you look at the lower time frame, so this is a counter trend. Okay, you were trading against the middle. So that's why when it came over here, when it got to the level, it started retracing, because it retraced 100% to the impulsive phase at the H4 and started falling. You get it? So this move was a counter trend, but counter trend is subjective based on the time frame you are trading. So This is a perfect. You see how it made a perfect pullback. I didn't consider this one earlier. I would have taken a buy sharp. So this is where the buy would take him. I don't know whether than you took it around the side. Next one. This was a perfect 1 to 2 plus. But what they say, you have to learn. So you see, it's mostly respect the level. And you notice that as it came over here to what happened, it started retracing. But there was no entry over here because I don't mostly trust, and the timing was very bad. And you notice that they started retracing. So the levels are very powerful. So this move that I was talking about was also a counter trend because the main trend was a downtrend, but it's also a counter trend. But one thing I've noticed is it mostly respects the higher time frame level. So it's okay if you are taking a counter trend, because I noticed that the H12 made some trend line moves over here. Okay, there was a trend line moves over here. So this was a nice counter trend trade. So let's see how this week 2 is going to go. But I hope you have prepared. Well, last week I took only one trade. This trade that I took. That's the only trade. Okay, because I'm new to this instrument. I'm kind of, I just started trading it seriously this month, and I'm enjoying it. I'm enjoying the moves better than currencies. So let's see how it's going to go. Any question? If there's no question, any question? Then you don't have any question.
No, I don't have any question for now.
So how far with your account? Is it still down or up now?
I'm still up. I'm up by 2%.
Hey, that ain't the way you are.
I'll pass. I'll pass.
Oh, but you've tried. You've tried. Like your first time, at least. You've tried, at least. You are learning.
I'll pass.
Back and forth. Trading is not easy.
And the more I lose, the more I get to know more. So
you do what?
The more I lose, the more I get to know more about the market.
Yeah. It's a change.
If my colleagues will be listening, the trading plan is very important. So you know, the plan I told you earlier, I was not following it.
Trading plan.
The plan I sent. You know, when we started the bootcamp, the first time I joined you, I prepared a plan and I forwarded it to you.
Yeah.
So I was like, this thing, let me just follow the strategy, the news and stuff. But in fact, I went back to the plan, redefined the plan, my trading rules and regulations. I realized that it's working. So like you said, Mondays, I don't worry about trading.
Yeah, especially on gold. Gold is abnormal instrument. You can trade it on Monday, but currencies Mondays are very bad. Currencies, I swear, it is very terrible. Gold is gold. You can trade it. Gold, even bank holidays, it moves. It's abnormal. But currencies on Mondays, don't try. You'll be disappointed. And nice. You know what? The reason why I even stopped currency was one Monday or so. It was perfect setup, daily downtrend, H4, all the time frame downtrend. I took this trade and this trade said it's not going down. I said, I don't do that, Charlie.
Yeah, currencies on Mondays, yeah.
Currencies are not. It's hard to trade. NAS 100 sometimes also gives.
That's expert. I try to follow it, but I share. Yeah, I can't. Sometimes the weeks are just too much. You just be there, then you see 1 week. No, this person is not my friend. I learned it's a tech pair. It's a technology something pair.
Yeah, technology companies.
Yeah.
But last week I saw some breakout entry on them at this point also. So yeah.
Was perfect too. On the 15 minutes.
Yeah. I think it's pulled back. Yeah, it came back to this one. That was a
Into the left.
perfect. It came
So
to
did
the
you
level.
take? Look at it. Very nice one.
Yeah,
Look at the expected
but
level.
I saw it late. So how do you see the levels? Trading on the levels, how do you find?
You can see it's closed exactly on it. The body of the candle seated. It has seated on it perfect. It sat on it well.
Yeah.
When I see opportunities like this, then I smile. I'll just take it and then. But I know opportunities
Especially,
like this will be like, I'll be greedy. And I wouldn't want
yeah,
to
you're
close
right.
early. You see, these are the reasons I don't close early. Then I need to keep my profit.
Yeah. But I've really observed gold and I've missed a lot of opportunity. I'm hoping this week. I'm really prepared for this week. I'm really prepared. Yeah, I've observed it and I've noticed with the levels this week I'm really prepared. I'm hoping it's last week this trade was it was a nice opportunity. This one. I think I took it with Brainy. Brainy got some money and he said, "Hey, Charlie, good."
Yeah. He said within 15 seconds or 5 seconds or stuff like that. I
That
thought that
one is
if you try it again, go to behead him.
the reason why a lot of people say gold does not respect because they don't gold. If you trade it, mostly those lower time frames does not respect like that. That's what I'm testing though for scalping purposes. I'm testing it now to see. But one thing I've observed, it doesn't respect it as compared to the higher time frame.
And one thing about trading the gold too is that the structure given to you at the higher time frame. If you want to trade with the lower time frame, you must make sure you see that structure at the lower time frame. If the higher time frame is uptrending, then if you go to the lower time frame, you must make sure that level, that time frame is uptrending. If it matches with the higher time frame, then it is good. But if you are seeing different things at the lower and the higher time frame, it's advisable you just take sit and watch.
Yeah. What is everyone sees the market differently though. Some people too see it.
So usually most of my entries are on gold. I take it on the 15 minutes. I only make sure that what the higher time frame is telling me is almost equal to what the lower time frame is also telling me. Especially and then the H4. Those levels those time frames, I don't joke with them. They are magical time frames. So whatever they tell me over there is what I look out for at the lower time frame.
I see. All right. Let's hope you are going to have a good week. All right, guys. No one is having a question. There's no question. Next week. Okay. Bye-bye.